Hello, welcome to the weekly technical analysis review for Monday, July the 29th. I'm Rafi Barjan at XM.com, and this week we're going to be looking at the pound dollar, the euro yen, and the Aussie dollar pairs. So let's start with the pound dollar. We can see that the near-term picture is looking rather bearish. The RSI is just at the oversold level, and the MACD has crossed below its red signal line. So if the downside pressure continues, the next key support will likely come first at the 200% Fibonacci extension of the outlook from 1.2505 to 1.2783. So that's around 1.2227, and then lower down we've got the next key support at 1.2055, which is the 61.8% Fibonacci extension. But given the current oversold picture that we're seeing, an upside correction is possible. So if we do see prices turning higher, the initial key initial resistance to watch out for is the 1.24 handle. That's the 138.2% Fibonacci. So if prices were to reclaim the 1.24 handle, that would help shift the near-term picture to a more neutral one. And then if we do see further gains towards the 20-day moving average at 1.2486, that would help shift the picture to a slightly more positive one. However, there's likely to be a very strong resistance at the 78.6% Fibonacci at 1.2564 before the reaching the 50-day moving average, which it needs to do in order to shift the picture to a more convincingly bullish one. In the more medium term, though, it's looking very bearish indeed for pound dollar. Let's now turn to the euro yen pair. We can see that it's kind of a mixed picture in the near term. The stochastics are heading higher and they're they're in positive territory. Looking at the RSI, though, it is flatlining below the 50 neutral level, and looking at price action, it's looking very flat at the moment. We do have immediate support at around 120.75. That was near the June low, also near the Tenkan Sen line. So that's, if that support was to break, we could see euro yen heading back towards the 2-year low of 120.04, which it reached earlier this month, and so that makes the 120 level a very important support barrier. If that support is broken as well, the next key level to watch out for on the downside would be 118.20, which was an important resistance and support level more than 2 years ago. If though we do see some kind of an upside move, and we do see stochastics helping the prices move higher, the 20-day moving average is the key resistance to watch at 121.34. Breaking above that level would help shift the near-term picture to a more positive one, but there's likely to be very strong obstacle at the 121.70 level, which is which coincides with the Kijun Sen line. It's also where the old ascending trend line is currently heading towards, as well as where the 50-day moving average is currently converging towards. So that makes that whole region a potential strong resistance level. If that's broken, we could then see prices breaking inside the Ichimoku cloud, and that would of course help shift the medium-term picture to somewhat more positive one from the current negative one. And the final pair for today, looking at the Aussie dollar pair, we can see again we've got a very bearish picture in the near term. Indeed, it's looking extremely oversold. The stochastics are in oversold territory, and the MACD has turned negative. So it's not looking very positive at all, and if that decline continues, we're likely to see the 78.6% Fibonacci retracement of the outlet from 0.6831 to 0.7081 acting as a potential barrier, and then if that level is broken as well, Aussie dollar could head back towards the 5.5 month low of 0.6831 we saw back in June. Below that, the The next major support would be the 123.6% Fibonacci extension at 0.6772 before reaching the 138.2% Fibonacci at 0.6735. On the upside, if we were to see a near-term correction, which of course, given the how oversold is looking, that's more than possible, and already we're seeing prices just about turning positive at the moment. So the first key resistance would be the 0.6927 level. That's the 61.8% Fibonacci, and then we've got the 50% Fibonacci at 0.6956. If prices were to reclaim the 50% Fibonacci, and also that also happens to be where the 50-day moving average is, that would help shift the near-term picture to more positive one. But for the medium-term picture to become more positive, there's the Aussie dollar pair has got some way to go at the moment. We can see in the long-term picture, prices have been within a downwards trajectory within that linear regression channel, and then the upper level of the channel is actually currently at the 0.71 handle. So that's it from me. Thank you very much for watching, and have a great day.